Welcome to Psycho Investor channel, where we chase life-changing double-digit yields and I publicly share my personal journey to financial freedom. Today we are talking about something that might shock you, our lower yield positions. Yep, you heard that right. Even psychos need some sanity in their portfolio, and I'm going to show you exactly why these positions are crucial to our money-making machine. Main and QYLD. Together, these two positions make up over 31% of our entire portfolio. Some of you might be thinking, has the psycho investor lost his mind? But why would you allocate so much to lower yields? Well, let me blow your mind with the method behind this madness. Let's start with Main Street Capital, ticker MAIN. This beast takes up to 12.57% of our portfolio, and while that 4.25% yield might look tiny compared to our psycho plays, there is way more to this story. Main is a business development company, or BDC. Think of it as a private equity firm that you can invest in. They provide capital to the middle market companies, which are businesses too big for bank loans but too small for Wall Street. They are not just lending money, they are taking equity stakes in these companies. We are talking about businesses generating from 10 to 150 million in revenue, and when these companies grow, Main makes money in three ways. First, interest payments on loans. Second, capital appreciation on equity stakes. And third, exit gains when companies get sold. Now, check this out. Main's dividend history during the 2008 crisis. They kept paying. COVID crash. Not only did they maintain payments, but they also kept dropping special dividends. We are talking about a company that's been growing distributions for over a decade. Let's talk entry points. Main typically trades at a premium to a net asset value because of its track record. But look at these technical levels. Whenever it hits the 200-day moving average, it's been a solid entry point. And I've got it at 44.22 euros. And we are already up around 38%. During market crashes, Main shows its true colors. In March 2020, when the market dropped 35%, Main fell, but kept paying dividends. By 2021, not only had it recovered, but it also gave us a special dividends as a bonus. Now let's dive into our second stability play, Global X Nasdaq 100 Covered Call ETF, ticker QYLD. At around 19% of our portfolio and yielding around 10%, this is our middle ground position. QYLD's strategy is beautiful in its simplicity. They hold the Nasdaq 100 index and sell covered calls 1 month out, typically at the money. Let me break down exactly how this works. Every month, they are selling calls against their position. With the Nasdaq's high volatility, these premiums are very juicy. And let's look at actual numbers from last month. They collected premium equal to about 0.8% of the portfolio value. Do that 12 times in a year, and you will see where that 9.5% yield comes from. Now you might ask, QYLD over the other covered call ETFs. Okay, let's compare. JEPI uses S&P 500 and has more flexibility, but lower yield. XYLD follows S&P 500 with similar strategy, but different volatility profile. RYLD uses Russell 2000 and has higher volatility. And here is something most investors miss. QYLD's premium generation has a direct correlation with VIX. When market fear is high, premiums go up. Look at these spikes during high VIX periods. This is when QYLD really shines. In different market conditions, QYLD behaves exactly as designed. Sideways market, perfect scenario, full premium capture. Down market, premium helps offset losses. Up market, some upside capped, but consistent income. Now let's talk about how these positions work together in our psycho portfolio. We're using about a barbell strategy. Aggressive high-yield positions on one end, the stability plays on the other. Perfect balance of risk and reward. Looking at the correlation between these positions and our high-yield plays, when our 100-plus yielders get volatile, Main and QYLD typically move differently. This is by design. We are engineering income stability. During different market cycles, these positions light up. Growth markets, Main shines with capital appreciation. Volatile markets, QYLD premiums increase. Bear markets, both provide steady income. The sizing of these positions is crucial. Together, they make up 31% of our total portfolio. This gives us psychological strength to be aggressive with our other positions. Think about it. How can you handle 120% yield positions if you don't have a solid foundation? And for those asking about implementation of the strategy, first of all, use limit orders for entries. Buy main on pullbacks to moving averages. Enter QYLD when VIX is elevated. And always keep some cash for adding up on dips. Look, I know some of you might be disappointed that I'm not showing you another 100% yield play today, but this right here, this is what separates the true psycho investors from the gamblers. We are not just chasing yields, we are building an income-generating machine that's built to last. These lower yields positions might not be sexy, but they're essential. They are what allows us to be aggressive with our other plays while still sleeping like babies at night. And remember, even a low yield of 5 to 10% is still very sexy compared to what the average investor is getting. Drop a comment below with your favorite stability plays and don't forget to smash that subscribe button for more psycho investing strategies. See you in the next videos.